Talking about retailers, direct marketer Verimark's headline earnings per share declined by almost 1/3 to 7 cents. The group's earnings were impacted by increased costs and a slowdown in new product launches. And joining us now from the JSE for a closer look at the numbers released this morning is Mike van Straaten, CEO at Verimark. Thanks so much, Mike, for joining us this morning. Well, looking at that headline earnings per share number, it's come in at 7 cents. So a decline coming through there with revenues down 2.2%. Run us through some of the pressure points that have come to bear on the business for the 6-month period.
Good morning. Thank you for having me on your show. The reality is about 6 months ago, it was stated that phenomenal growth that Verimark was experiencing over the 2 financial years before, of 38% and 33%, was not sustainable. It was phenomenal. We nearly doubled the business activity over a 2-year period. Now, that brought phenomenal stresses on the infrastructure, and we start feeling it towards the end of the last period, and therefore we have indicated that we expect this to be there would be a consolidated phase ahead of us, which has clearly have stepped in. It was created primarily because of a slight slowdown in product introductions. We have actually, the good news is that we have actually tested a lot of very exciting products during this period that will be rolled out and launched in before the Christmas period. Just for some comparison purposes, the first 6 months normally generate about 33 to 40% of net profit. The balance obviously created over the next 6 months of the Christmas period. The whole retail environment is clearly a lot tougher than probably everybody expect. You just need to speak to the big retailers to understand things. The consumer is definitely holding tighter on their money.
Yep, of course. So while that is the scenario and the operating context that you're finding yourself within, you've got to also get a tight handle on your expenses moving forward. So run us through some of the strategies at play in terms of reining in on costs moving forward.
That's correct. If you get a bit like flat growth and your expenses increase with inflation, clearly you will have a bigger effect on the bottom line. The reality is, when this infrastructure became under pressure, we could not control all those expenses to the level that we should have. There was a few expenses that we have starting to focus on. Some of them will unfortunately take a bit longer to resolve. An example is towards the end of the previous financial year, we actually operated out of 2 warehouses. That duplicate your cost. That really a lot of inefficiency stepped into the system. We're at the final stages now to sign a lease for a brand new warehouse, nearly double the size we're currently utilizing, and that clearly will only be ready in about 12 months' time. So there's some of the expenses will take a little bit longer to resolve, but many of them has been identified. We've made some progress, but we need to make some more progress to get all those expenses fully under control.
Of course, when it comes to distribution, you've had a strong positioning on that front, because not only do you hold your own stores, but you boast your products within other retail segments as well. Run us through that distribution strategy and whether or not it's paying off for you at this stage.
The Verimark today is undoubtedly the benchmark in the world of this integrated strategy, taking direct response TV products into retail. We started doing this about 18 years ago, and that strategy has worked phenomenally well. Today, Verimark distribute product through more than 2,000 retail stores. We work with all the big retailers, from Game, Macro, Shoprite, Pick n Pay. We have a presence in those stores. We have our own salespeople in most of those stores. In fact, in some of those stores, we have probably 4 or 5 salespeople over the peak trading periods. We also have 80 of our own stores. They are a combination of franchised and company owned. And these dovetail into each other, and we believe that is the right distribution model. Appreciate that the model starts with direct response television, or let me rather say ordinary television advertising. Verimark today is the 3rd biggest television advertiser in this country in terms of a Nielsen's report that came out in January this year. We really, found those innovative products. We do aggressive advertising, and we have the distribution.
What about your products on offer? Because a lot of Verimark's products are discretionary. They're specialist items. Any thought as to a change in strategy there, to work to your advantage, where consumers still have a very tight handle on their purse strings?
I must disagree with you that the Verimark products, because of their uniqueness, their differentiation, and this aggressive advertising that we do, there is a phenomenal demand. In fact, they say in recessionary times there is 3 industries that does normally not get impacted by a recession, and that is really insurance. People obviously start feeling a bit more nervous and they take out more insurance for their families. The next one is drink. People probably seem to buy more alcohol. And the third one is direct selling. Our model is based on direct selling, so it is more recession or when the economy goes tougher, it'll be better for Verimark to operate than other retail companies.
Of course, what is going to be affecting your competitive advantage is where that rand is sitting. I mean, the stronger rand has been holding in your favor, Mike, over the past, but we've seen some weakness starting to filter through now. How's that rand dynamic influencing your business?
No, you're spot on there. I think any importer in South Africa will be impacted by a weakening rand. And you're right, the last 4 months we've seen the rand moving from about 7.20 up to 8 rand. We have done some research, talking to the people in the know, economists, etc. And it appeared that most of them target the rand back to about 7.50 towards the end of the year. But the reality is it will negatively impact on our profit margins if the rand stays at 8.20 rand. That's something that we all importers will have to bear, and as we will have to do. Our focus clearly is to bring in more exciting products and just execute our strategies better, get a tighter grip on our expenses. As I said, we've made headway. We think we can actually have a good next 6 months, but the rand could obviously play a role in this.
Very, very quickly, just taking a look at the Verimark model, can you pursue this model outside of South Africa?
You're touching on a very sensitive issue here. We've been looking at this for the last 2 years. There's a vast amount of interest. I don't want to indicate which countries. In fact, I returned about a week ago after a 2-week trip around the world, taking us from Europe into America, into Australia, and back. Yeah. And there is a vast amount of interest because people is still literally 7-8 years behind Verimark in terms of taking these DRTV products, direct response TV products, that you traditionally could only get by phoning a call center to get those products in the retail outlets. Verimark has the product range, and that is things that we would obviously look at in the future, even up into Africa. Many of our trading partners, our retail partners, has got a big presence there, and that is things that we would like to explore.
Well, certainly, Mike, it is development and progress that we'll be keeping an eye on. Unfortunately, we're going to have to cut the conversation there. We've run out of time. Mike van Straaten is CEO at Verimark.